Hey guys, happy Thursday. Hope you've had a great week. Wanted to do a quick recap here as we move into Friday. Got one more day to make it happen here. Um, Wanted to go over charts on the yield curve, so from 5s to 30s, and maybe we'll take a look at the equities and if we have time, the metals, but I wanted to make this a pretty quick video just to look at where we are, see how Friday might play out, and what to expect moving forward. Been pretty wild moves the last 2 days. With the Fed announcing a quarter point cut, and as the dot plot came out, the showing sort of like it being all over the place, really, as far as the participants go. That made things pretty interesting, at least on the yield curve. Equities had their spill initially, but obviously recovered, made a new high, and they're just doing equity things. That's what equities do. Anyway, let's go ahead and get into it. I'll start with the fives. Flip over here to this chart. What I've got here on the right, I don't normally show the volume profile just because it clutters things, but I did want it so we can see how things have developed in relation to the levels we laid out Sunday night or Monday morning. So, it's always interesting. This volume profile only includes trading that has happened this week. So it's fun to see how our levels actually work, because you're going to want to look for these sort of higher volume nodes. Will tell you how accurate you're being. It's not just about highs and lows, it's about where trading is concentrated. That's what these are meant to do. Now here, our levels have been pretty accurate as far as giving you a trade. If you were looking for a short on the fives up there, that was a good spot. It's also a pretty obvious number, the 110 area. But in reality, when we're dealing with things in real time, it's just good to see volume concentrate around our levels. So as you can see, the fives weren't super accurate this week, although we did see good builds around our first resistance there at 109.27.2. You see this poke above and then the sell off, and this thing's just been pretty much, other than this little squeeze here, has been pretty much getting pummeled. Was to be expected. You have to think, everybody's been pricing in rate cuts, and they got pretty aggressive to that end. And the fives are going to show that the most, right? Now, what I would expect, as you can see, like this one, the average weekly range is about 30 full ticks. You see up there, top left, it says 29.93, so just round up. So far this week we've done 110.01 down to 112.2, or 109.12.2, which is our pivot. Our second support, excuse me. So that's 21 minus 2, so that's 20 comma 7, or 20 apostrophe 7 ticks. So probably a little more room to push lower. Even if it hits this third support, you're looking at still not being at full range for the week because we didn't hit this top edge. So little ambiguity there, just because you have to. I think that this cools off. The selling in the fives cools off and goes more into the long end. You'll see that as we go through the charts, but I think this sort of settles down. So I don't know if this is going to make it, but if it does, get past this 109.072 level at the lows, we really count between these and add, or subtract 5 ticks there. So you got 109.022 would be another level below, and that would actually complete our range, somewhere in there, slightly above it actually, because this tail. So that's what you're looking for. So probably more downside tomorrow, and we'll see how it plays on that. Okay, I don't know if too many of you trade that anyway. Let's go to the classic 10s, zoom in, same story. So this is ZN. A lot of people trade that, I suppose. Similar picture. Those two aren't that far apart. I think the average, that's supposed to reach any bond between 7 years and 9.3. So it's the ZN, the ZN contract covers bonds from, I'm not 100% on this. I'm going off memory, but we're talking about 7 years to 9.3. That's not that different than the 5 year. So they have similar charts often. Anyway, same story. You poke above this R2, and we sold from there. So that's your high of the week. I'm about to sneeze. Hold on. Thank you. Excuse me. So you're at that 113.23 was our second resistance. We got 2.5 ticks above that. So 113.25.5. We have a weekly range of 44, average expected weekly range of 44. So you can count 44 below there. You got 25.5 minus 18.5. Let's see here. So 18.5 below the low. Real quick. Puts you down 112.045. 112.045. So if we, that would be, let's see, these are 9 apart. So that's in here, which if you look over left, that's, something to pay really close attention to, as I mentioned the other day, is this is the spike off of payrolls a couple weeks ago. As you can see, we're trading through that, and it looks like it's starting to act as a resistance. So, I don't know that it's going to open up that much. And I may have just done my quick mental math sort of wrong, but looking down here at about 7 ticks below there, see, so in the 11, so 112.11, somewhere in there, which if you look far left, you can see that that was a bit of resistance prior to this move into payrolls. So interesting there, more downside. We obviously are, the reason I'm not talking about the upside, I'm not being like a bear here. I'm just saying, like, we already know what we're working with up here. I'm talking, what I'm more concerned about when I go into a Friday or any trading day is what the potential is below. We all know we can trade these reference points. We're not idiots. And we already have all this built out. So, what happens when this breaks? And I think that most traders run into like a state of confusion when that kind of thing happens. Or that's what the meaning of all this stuff is to help you or help us have targets below and so on without having to just zoom out and find lines that don't always work that well anyway, right? This is obvious stuff everybody's looking at. Well, let's just say it makes a move, it blows through there. We know that, once it hits that 44, we're done. Once the full range for the week, we just count them that we're out. We don't need to fight it. So that's the point of this. So, anyway, let's move on. Let's do the Ultra 10s now. It's one of my favorite products, by the way. So high of the week, 116.18.5, which exceeded our R2 by 14.5, but it was a pretty good reference point because you already had it there from last week. That was the high from Thursday of last week. So that was one of those obvious reference points when it poked above and then failed that you could get on and you could short. I did. Anyway, came on down blew through our pivot pretty quickly and easily, and then on down to this support, which I'm sorry, I kind of got overzealous with the zoom there. Excuse me. This support that broke this morning was pretty strong. I mentioned it in a tweet, if you follow on X, which I assume most of you do. Mentioned that this area needed to hold, otherwise we start breaking through our payrolls candle. So, all right, well, let's take a look at the math. So we're expecting 56 ticks. Currently, the range is 116.18.5 plus 115.06, so 12.5, so 44.5. I actually have an indicator. Let's go ahead and throw it on here just so I don't have to bore you guys doing math. So easier to find. Current weekly range. Boom. There we go. All right, so now we got up here, it shows the current. So we got 11 or 12, let's call it round up, 12 ticks to play with to the downside from that low. So where does that put us? So 115.06 is your low. So that goes 6 down to 115, and that puts you at 26. So 114.26, which would be slightly below our third support, 115. I don't know if we're going to make it. that is pretty strong. But if you do get an extension, a lot of times on Friday morning, if say we wake up with a gap down, sometimes they'll push it. Europe likes to push things, I've noticed. So like they don't, I don't feel like they really pay attention to levels over there. They just go. You have to think about it. That's when people talk about the other time frame trader, the person you're up against. That's who it is. It's them. It's people in New York or Chicago or whatever as well. These that have a lot more money than you or I do, and they're not really concerned about day trading and so on and squeezing ticks out. So we got to be aware of those people. A lot of times Europe will just hammer something and carry it down. So anyway, got off track there, but so really what you're looking at is right in here, which would be slightly below our third support because we didn't make it all the way to our third resistance. So we have to take that into account. We're 5 ticks off that. Go 5 ticks below here, you're at 114, 26, 27, somewhere in there. And then you go look at a chart and you see if that's a reference point. It's not really, not a lot going on there, but it's probably, I would guess by this move, that area is probably a low volume node, and a lot of that needs cleanup from this move right there. I don't have the profile built out for that long, although I could real quick. I don't want to mess with it. But I'm certain that this got blown through on very low volume. It looks like it was mostly during European session. Actually, this was a gap up. And then, see, 5, 6, 7. It was a gap up. They got filled and then just shot through. So, anyway, sorry, it was my Bluetooth speaker turning herself off. So there we are. That's sort of where you need to be looking to cut bait on a Friday and just say I've had enough. This has been a good week. Move on if you're short. As you can see, this is the slope on that average is just now starting to turn negative. So technically, it's a fresh new downtrend. So what we can do is maybe like put in some like a little drawing or something like a trend line here and watch for areas to sell from that it might sell from, because like it may creep up overnight like it did last night. I believe we have a BOJ tonight, so that anything could happen on that. So there you have it. That's where you need to be looking on TM. Now let's move on to ZB. Probably more of you trade this than the others. ZB has been beautiful this week. We couldn't ask for these levels to work any better, to be honest with you. We had the high, 118.21 is the high of the week. That was our third resistance. We knew about it Monday. Nobody else did. Anyway, then you look at our R2. This is interesting. So 118.06 is pretty close to that 118.08, which is your value area high for the week. So 70% of the trading has been done between our pretty close to our second resistance and our just below our pivot. So when I looked at this earlier, it actually was on the pivot, was the value area low, but sellers have moved it down this afternoon. Meanwhile, the volume point of control happens to be pretty much right on our R1. So our levels have worked extraordinarily well in here. So because we have such a perfect clean move off of our top resistance, we can look up here and say, well, we don't even need to do the math, because you would know that, if you count it, 324 plus 64, that's 88. Okay, yeah. This should encompass the range. So tomorrow, if we start selling some more, that's where you're looking, 115.29. So we don't have to do much work here or guessing. It is what it is. We already knew what it was going to do, right? I'm being facetious. Anyway, so watch your 116.26. Watch how it plays around here. You can see that this is sort of built out. Buyers did step in here and stop the selling today. So maybe works its way up for a bit tonight, and then we'll be looking for sells. That's ideal. Otherwise, maybe trails down, and maybe we wake up and it's down here tomorrow morning, and then we know, hey, maybe try a buy down here, because anything below there you can anchor to this level, because anything below there is like sort of an extreme range extension. So we have not, I'll just put it this way, I cannot remember the last time we went beyond full range for a week. It might have been April or May. It's been a long time. So pretty awesome that this is working in that direction. So but that's what we're looking at. Don't have to do much thinking here. Let's go on to the Ultra 30s. Oh, I didn't like that zoom. Hold on. There we go. Yeah, actually I do like it. I want to make sure when I'm looking at this or showing you this, that I have these spike bases. And let's go back to ZB for just a second because of that. I kind of blew past that. So at that, if we do start working toward that level, you are working into this gigabit candle here. So that is where things start getting interesting. Now, you may remember, since we looked at, I'm going to pop back to the 5s real quick. We are through it over here, right? That's the payrolls candle right here. We're below it. We're through it and working back as if it didn't happen. So that's what the market's saying to you. It's like the payrolls did not matter in terms of the Fed, and so on and so forth. But you notice that as we move down the curve, I somehow deleted ZN in the process here. Here's the Ultra 10s are starting to work through. They actually almost made it all the way through that candle. But if we go to the 30s, we're not quite there yet. So a little more work to do for them to get to the same place, the front of the curve. So that's what I was talking about earlier when I said that I feel like the 5s are kind of, probably most of the selling is done in there. And that selling, any more selling is going to come toward the long end, which would be a steepening sort of situation. If you look over here at our curve combos, those are all blue for the day for the most part, which means we're steepening today. So we're starting to see that move. See if it carries on into the weekend. But that's sort of my guess. Is I'm saying that if you want to be a seller, you want to get in on the sell, your best bet is at the long end because there's plenty of work to be done. So let's go back to the ultras, just so I'm staying on track here. So I want to make sure this candle's showing, as I mentioned. See plenty more work here. Now we came up about the high came in about 5 ticks below our third resistance for the week. So we have to extend 5 ticks below here. So you're looking at about 119.02 is full range. And if I were to hold my cursor at 119.02, you'd see it's almost back to the top of this candle. So if that slips, there's where you want to anchor any sort of stop on a buy. I mean, that's an extreme fade move. I'm not condoning that. You always want to go with the trend. So, but if you were trying to get buys and fade the downtrend, you really just don't want to see it start working its way into this guy right here. So that would be about 118.30. Below there, it's just going to clean all that up the way the front end did. And I feel like that's coming. I just don't think it's coming this week. We only have 1 day left, and we're 20 ticks short of being full range for the week. And also the monthly, it's not showing here, but the monthly range is almost complete on this as well. So not a lot more work to do from that end tomorrow. So that's where you're looking. It's 119. You're going to kind of drop the 119.07 by 5 ticks. I'm not going to do it because these are all automated. I don't draw these lines. But that's where you're looking, 119.02. All right. I'll do a quick glance at the equities real quick. So this is kind of boring just because it's, this only goes one direction, it seems. I don't trade this. Main reason is just doesn't really make sense to me a lot of times. I'm not saying I'm just saying the price action doesn't really work for me for the way my brain works. Let me fix something real quick. We're gonna lose something. I have to change it because the calculations, the range calculations on what I was showing you on the curve are specific to for bonds um, because of the tick value difference. We trade on 30 seconds, whereas this trades on points. So when I use that indicator on this, it's crazy. So I'm going to add back real quick the find current weekly range. Where is it? I'm sorry, guys. Current weekly range others. There we go. All right, so ES has done 109 ticks, or 108.75 tick or points, handles, whatever you want to call it, in range so far this week, with an average weekly range of about 220. So it really hasn't done much. It's done half its range. And tomorrow's what? Options expiration or quad witching, whatever you want. I think, yeah, it's quad witching. So maybe it opens up tomorrow. Um, Here's where you are. It's been sort of stuck on our first resistance. It's where it's pretty much settled today, I guess. Um, Pivot was pretty good up until the craziness around the Fed, where it did this guy, which was just closing the roll gap, which you can't see the gap on this chart because of the way I've got it coded. But the roll gap was what in here. I don't know. Yeah, it basically just ran down to the roll gap and then went gigabit. And this was insane. I was watching it, and like I said, I don't trade it, so I don't really care what it does. But I was talking to my buddy Chris and saying, "This is insane. This is all after hours that it was doing this crap." And it went up and it hit that 67.20 area, which we talked about in that in our weekly post, where it's not a level that my system kicked out, but it is the 10x from the financial crisis low. So you have to factor in the 60-point spread between ES and SPX. And that's 6660 SPX is basically. But this was done during pre-market, so it doesn't count. So they probably going to want to see that print in cash session. Maybe it does that tomorrow. It'd be interesting, but it's a big number. I mean, 10x from the financial crisis. I think that's a place that I would be very cautious around it. I know that everybody's bulled up to the max, but I'm not. I'd like to see how the market acts around there. It rejected it initially here, but it's obviously because it didn't break anything to the downside. It's obvious that they still want to see it. So maybe look out tomorrow morning, see what it looks like, or who knows, maybe the Bank of Japan does something and bombs this thing. But I just think the ES pretty much lately seems to be completely impervious to anything. It's just doing whatever. It's on a mission to do something, and it hasn't completed that yet, and it's quite clear. So I don't know if it's the 6720 that's going to do it, or if it needs to go, I don't know, 7,000. I don't know. But clearly, when you're seeing this just persistently move higher, it's saying that it's not done yet. So it's not time to short it, if that makes sense. Hate to break anybody's heart there. But I know a lot of people want to short it because it's just ridiculous. But why would you want to be in a trade that's painful? I mean, that's all there is to it. I like I like easy trades. I like things that happen really quickly in my favor, and I don't have to sit around and freaking obsess over it. I just want the trade to work. This shit, excuse my language, this thing, it's impossible to short it right now. So eventually that'll change, but for now it's just not a comfortable trade. And your best bet is to just wait for these sell-offs and try to jump in and ride them up. I don't know. Not my thing. I stick to my bonds. But leave you guys with that. Let's go look at NQ. This thing's been going absolutely bonkers. 574 handles a range. 970 is the expectation for the week. We pushed past this second resistance, so you still got this up here. I don't have any sort of compass on this like I do with ES. But clearly the same story is in play. Every minor dip is jumped all over. So not time to get short. Just Ride the wave until you get. I guess another way to put that is get beat long on this. If you're going to lose money, lose by buying uh, rather than trying to short it. Look at this short. This is a great trade. It played out pretty well, and then boom, hits that average. And if you're not ready to take your profit, you're cooked. You give it all back, and that took what 1, 2, 3, 4, 5, 6, 7, 8, 9 hours to wipe out. What is this? 15 hours of work. So I don't know. Same shit. Let's go get the Dow real quick. Sorry about the coughs, man. It's allergies down here in Texas. It's a crappy time of year. Um, this is interesting. It's kind of hovering around that first resistance. Hasn't really touched this. Our second one. It's done less than half of its average weekly range. So a lot of potential here. And the obvious is just like with the other two clowns, that the potentials, the higher probability is that potential is achieved at higher prices until somebody steps in and says no. So there's that. Our first support here acted pretty nice. If you trade this thing, that's clean. What do you got? 26 handles a draw down right here. So what is that? This thing's what, $10 a point, $260 in drawdown. That's not bad. I mean, pretty uncomfortable, I suppose, but that's a pretty quick tail. If I zoom in, I bet it's a couple minutes. And there's a nasty tail on the interest rate announcement. Here's one we don't cover, but I'll go look at it. It's the Russell. We got all-time highs in this piece of shit. I don't know what would compel someone to buy this, but whatever. The penny stocks of tomorrow. I always call. You guys, anybody who knows me knows I hate this thing. That's why I'm talking smack. But if you like it, good on you, brother. But this is actually probably a more interesting, from our perspective, a more interesting trade. If you're long, for instance, and you're wondering, well, we're at all-time highs. What do I do now? You got about 23 handles of extension, another $1,150 per contract if you're trying to hold it. That's what you're looking at, because we haven't really tested more anything beyond this first support at 2406. Which, gosh, that was clean. Maybe I should trade this thing. But gosh, that's 85 handles off of that low of the week, so that's pretty clean. So that's what you're looking at. You've got another 23 handles to play with this week. Anything beyond that's sort of an extreme move. And when I say that, I mean that if I'm trading something and it goes beyond that, I don't care. I'm already out of it and I walked away. I don't give a crap if it goes parabolic and just leaves where I exited. I made my money. I'm here to make money. I'm not here to be a hero. So that's that. So that was a little bonus there. We looked at the Russell. I'll never look at it again. Just kidding. I told you if I had time. Let's see, what are we looking at here? I'll probably do this real quick. Let's go see how the metals are doing. Metals got sold a bit as they kind of follow bonds, I guess, a little bit. They shouldn't, but that's what they're doing. That's probably more pertinent to what's going on in the dollar. Let's go look at DXY. This chart's going to look wacky, by the way. Don't mind the levels. Dollar had a pretty strong rally. That's probably hitting the metals. So 37.44 high of the week. We had 37.42 as R2. So good on anyone who was playing this. I wasn't. I didn't catch that. That was a good short, similar to the bond short. It looked pretty much exactly the same. You had a tail above, quick look above, then fail, as my buddy Chris always says. That's a good setup. And looks like, so all right, if 37.44 is our high of the week, and we got another 54 handles of extension below, you have your downside target in place. So 36.28, let's see here, 23 above, so 23. So it puts you about 3605. Where does that put us? Let's go see. That's back at this old area back here. So quality stuff there. Let's look at silver real fast, and we'll look at the buck coin, and then we'll go about our days. Again, don't look at these numbers because due to the code that I have the equity code up, so this one works better on the bond code. Hard to explain. Anyway, same stuff. Look above, fail. This one's not very clean. I'm not proud of this. Let me load up the style here. This will look a little different. Okay, there we go. Not proud of these levels. That did not serve you well. That is a lot of drawdown. 20 points of drawdown on that first resistance, and that is a lot of money on that product. That's $1,000 per contract. No thanks. But what are we looking at here? Found support and more drawdown here. Maybe I should just trash silver. I don't know. This is not clean at all. I'm kind of embarrassed. It worked pretty well before the number. There you go. But now that the volatility's hit this market, the wheels have come off and my levels suck. So, all right. But what are we looking at? An average weekly range of, don't pay attention to that number. Let's see. We can just do it this way. 43.95 minus 41.78. That's $2.15 or 17 cents. And we've done 41.48. Where's it? So another 17 cents below there. If it wants to sell again, that puts you down at like 41.31. Yeah. Puts you down, which is that support right there. So that could be something to pay attention to today, or tomorrow, excuse me. All right, let's go look at Bitcoin and we'll move on with our lives. I got to load the equity thing back up. Sorry. These are Bitcoin futures. Oops, sorry, wrong chart. Gosh, rookie. All right, cleaner now, eh? Bitcoin on its tear, with the following the equities, I guess. Levels worked okay, I guess. But what are we looking at? 7183. Let's add a study. User defined. CWR other. And about half, or a little, probably about, that should be about 58%, I would say. I'm just doing quick mental math. 3660 is the current weekly range. We do 7183, so we really haven't done much. Looks like, same story as equities here. Your potential's higher probability to the upside on that one as well. So we got all these levels to work with. Anyway. All right, guys. Well, hit me up if you have any questions. Discord's open if you guys want to join. It's like 5 or 6 of us in there most of the time. But again, thanks for staying with me. Thanks for subscribing, and hope this stuff's working for you. We'll talk soon. See ya.